Hey guys, this is Jeff Wright with Fish Creek Capital. We're an investment advisory firm in Birmingham, Alabama, and this will change your mindset on retirement. Mindset is a big piece of retirement, and you've got to have that correct. And so I'm going to share my screen. We focus on dividend growth investing and creating cash flow for retirement. It just takes the worry out of retirement and worrying about running out of money. And I love helping blue collar business owners discover this mindset and being prepared for retirement. So I'm going to share my screen and show you just some data that goes along with this mindset and our strategy. We're just going to use a simple dividend ETF. This is the Schwab dividend ETF. We do create portfolios of good dividend growing stocks, 20 to 30 stocks in a portfolio. But if you're just looking for a good dividend option that's simple and has a good track record, this Schwab ETF is a great tool to use. The ticker is SCHD, and you can pull that up on any platform. If you need help with that, put a comment in below, and I'd love to help you with that. We're gonna use a 20-year time frame, and the cool part about just this whole idea of building cash flow for retirement is that you can use data to predict and to show what that might look like. Again, this is not guaranteeing any results. Past performance does not guarantee future results. This is for educational purposes only. But it is nice to be able to go look up this ETF and to pull the data from it. I actually used Claude to help create this example, and it's a great tool for that as well. So the current dividend yield on the SCHD is 3.45. That's going off the trailing 4 quarters. So basically this past year, you can see the dividend growth rate is 10%, which is great. Again, I've got other videos. Go look at them. If you have a lower dividend yield with a good growth rate, that is going to beat a high yield at any time. So and this is going to help kind of show that. The Schwab ETF has actually had a price appreciation of 8% a year, and that's a conservative look at that. The expense ratio on this ETF is super low, 0.06%, and it does pay dividends quarterly. So we're going to just use the example of, before I scroll down a little further, and you can see that we're going to use $100,000. We're not going to even put any money in it. We're going to turn the drip on. That means you're going to reinvest all the dividends, and you're not going to touch those, and you're going to let compounding take over. This is a tax advantaged IRA or 401k example. So let's just scroll down now, and you can see these numbers. After the first year, no big deal. You got the 3.85% yield on the cost. You got a dividend income of the $3,600 and an end balance of $111,000. Look how it jumps in year 10 up to $370,000, annual dividends of $27,000 a year. But look at the yield on the cost. This is the yield on that means the yield on the initial $100,000. You're getting a return of 30% a year on that money. This is how you beat the stock market. Even after year 5, you're getting a 9% yield on the dividend income. And this is the best way to think about the stock market and to have your mindset for retirement. If you can be patient and grow these dividends, after year 5, just in the dividend income alone on the initial investment, you're going to be beating the stock market basically every year. And that's how you want to think about this. By year 10, you're getting, that 30% return. By year 15, 121% yield on that cost. And then by year 20, you've got a 680% return on the initial cost. At that point, you've got $3.2 million. You're getting annual dividends of $583,000 a year, cumulative dividends of $2 million. So your $100,000 grows to $3.2 million. Your year 20 dividends again are $583,000 a year. So let's slow that down and think about that. That's $48,000 a month. And this is just the dividend income. So when you're retiring, when you're in retirement, it's very important to have your portfolio set up to where you're not pulling from the principal, right? That's the best case scenario. And this is a way to do that. If you can, again, let this compound and look at this as a cash flow machine, it will change your view on retirement. This is going to give you income that will keep you from taking away from that principal. Much like real estate, when you buy real estate, you're not necessarily looking at the balance or the value of that property every single year. You're looking at the cash flow that it generates. And that's what I'm trying to show you here. If you can let this compound, it's simple, but it's difficult because most people can't leave it alone. You don't want to chase the market. You don't want to chase, hot tips or time the market. I've got other videos on that as well. You want to let the compound happen. And if you can do that, when you're ready for retirement, you're going to have the income that you need. If you need help with that, I would love to talk with you. Please use the link below to schedule an appointment to do that. And I would love to talk through your specific situation. That does also matter. And again, this is for educational purposes only, not a guarantee. Please take the time, though, to think about the compounding power of not just a dividend, but in this case, a dividend that is growing 10% a year, and how that can grow over even a 20-year time frame, even a 15-year time frame, and can set you up with cash flow for retirement. Thank you for watching. Please like and subscribe. Again, I'd love to meet you. Use the link below. Visit fishcreekcapital.com. Thank you for watching.